Did you know that leaving your money sitting in a checking account is basically the same as throwing it away? While you read this, inflation is eroding your purchasing power. But here's the good news. With just a few taps on your phone, you can make your money work for you through digital banks and online brokers. Today, I'll show you exactly how to do it, even if you've never invested a single dollar before. Chapter 1. Why digital banks? Advantages. Lower fees. No costs for physical branches. Convenience. Everything through the app, 24/7. Variety. More investment options than traditional banks. Transparency. Clear information about returns and fees. Agility. Instant transfers and withdrawals. Main digital banks and brokers in the U.S. Chime, SoFi, Ally Bank, Capital One, Charles Schwab, Fidelity, Robinhood. Each one has specific features for different investor profiles. Reality. Traditional banks often offer savings accounts yielding only 0.01% to 0.05% APY. Digital banks and online brokers offer high-yield savings accounts, HYSAs, paying 4% to 5% APY, that's 100x more. Chapter 2. Getting ready to invest. Required documents. Social Security number, SSN, or tax ID. Driver's license or passport, proof of identity. Proof of address, utility bill, lease, etc. Bank account for transfers. Defining your profile. Conservative. Prioritizes safety, accepts lower returns. Moderate. Balances safety and returns. Aggressive. Seeks higher returns, accepts more risk. How much to start with? Many digital banks and brokers allow you to start with as little as $50 to $100. Recommendation. Start with money you won't miss. Always keep a separate emergency fund. 3 to 6 months of expenses. Suitability test/risk questionnaire. Most brokers will ask questions about your financial situation and goals. Be honest. This determines which products you'll be able to access. Chapter 3. Main investment products. Fixed income. Safer. High-yield savings accounts. HYSA. Return. 4% to 5% APY. FDIC insurance up to $250,000 per depositor. Liquidity. Daily. Ideal for emergency fund and short-term goals. Certificates of deposit, CDs. Return, 4% to 5.5% APY depending on term. FDIC insured up to $250,000. Terms, 3 months to 5 years. Ideal for medium-term goals. Treasury bonds, via Treasury Direct or brokers. Backed by the U.S. government. Options, Treasury bills, notes, bonds, tips, inflation protected. Start with as little as $100. Liquidity, can be sold before maturity. Variable income, more profitable, more risky. Stocks, buy ownership in companies. Returns from dividends plus price appreciation. Requires study and monitoring. ETFs, exchange-traded funds. Diversification in one product, e.g., S&P 500 ETFs. Low fees. Easy to buy, sell like stocks. Mutual funds. Professional management. Automatic diversification. Different strategies and risk levels. Chapter 4. Practical step-by-step. Choosing a digital bank/broker. Evaluation criteria. Reputation and customer reviews. Variety of products. Fees and commissions. App usability. Customer support. Quick research. Compare at least 3 institutions before deciding. Opening the account. Download the app or go to the broker's website. Register with your personal information. Identity verification. Selfie plus documents. Risk questionnaire. Initial transfer, ACH or wire. Making your first investment. For beginners. Suggestion. 50% in HYSA, emergency fund. 30% in a 1 to 2 year CD, better returns. 20% in U.S. Treasury bonds or S&P 500 ETF, diversification. In the app, access investments, choose the product, enter the amount, confirm purchase. Done. Your money is already earning. Chapter 5. Strategies to maximize gains. Diversification. Don't keep all money in one bank or broker. Mix different products, HYSA, CDs, bonds, ETFs, stocks. Respect FDIC coverage limits, $250,000 per bank. Regular contributions. Automate monthly deposits, e.g., $200 per month. Leverage compound interest. Pay yourself first. CD laddering strategy. Buy CDs with staggered maturities, 6 months, 1 year, 2 years. Ensures liquidity and better rates. Reinvestment. Always reinvest dividends and interest. Enable auto reinvest in your broker. Accelerates portfolio growth. Chapter 6. Risks and pitfalls. Always check if the bank is FDIC insured, if the broker is SIPC protected, all fees and commissions, lock-in periods. Beware of complicated products if you're a beginner, guaranteed high return promises, hidden fees, pressure to invest big amounts, taxes, savings and CDs, taxable interest, U.S. Treasury bonds, exempt from state/local taxes, but taxable federally, stocks and ETFs, 15% to 20% capital gains tax, short-term trades, taxed at ordinary income rates. Golden rule. Never invest in something you don't fully understand. Chapter 7. Tracking your investments. Monitoring. Track monthly through your bank or broker app. Compare returns with inflation. Review strategy every 6 months. Important metrics. Real return after inflation and taxes. Diversification level. Progress toward goals. When to withdraw. Goals achieved. Real emergencies. Planned strategy changes. Rebalancing. Every 6 to 12 months, adjust your portfolio as your goals evolve. Closing. What we learned. Digital banks and brokers offer much better conditions than traditional banks. Start with safe fixed income products to gain experience. Diversify across products and institutions. Make regular contributions to accelerate results. Always study before investing. Your action plan. This week, research 3 digital banks or brokers and pick one. Next 7 days. Open your account and make your first investment. First month. Set up automatic contributions. First 6 months. Study to diversify into stocks and ETFs. Final motivation. The best time to start investing was 10 years ago. The second best time is now. With digital banks and brokers, you have in your hands the same tools that only big investors had just a few years ago. The difference between those who build wealth and those who don't isn't how much they earn, but whether they have the discipline to start and the consistency to continue. Call to action. Stop postponing your financial independence. Download a digital bank or broker app today and take the first step. Your future self will thank you for every day you didn't waste leaving money idle in your account. Extra resources. Practical simulation. Investing $500 per month at 10% per year. 1 year. $6,308. 5 years. $38,789. 10 years. $102,307. 20 years. $382,848. Beginner investor checklist. Emergency fund built. Debts paid or under control. Digital bank or broker chosen and account opened. First investment made. Automatic contributions set up. Short and medium-term goals defined. Next steps. After mastering fixed income with digital banks and brokers, consider individual stocks, real estate investment trusts, REITs, international investments, cryptocurrencies, small allocation,